Hey, did you see that Ajax Engineering IPO is coming up soon? It's slated to hit the market on February 10th, 2025. Seems like a pretty big deal.
Yeah, I did. I was actually looking into it earlier. It seems like Kedaara Capital is planning to exit via an offer for sale.
Right. So, what does Ajax Engineering actually do? I mean, I saw the name, but what's their bread and butter?
Well, they're manufacturers of self-homogen concrete mixers, which are used in a lot of construction projects. They've actually filed their red herring prospectus with the Registrar of Companies.
Oh, okay. So, pretty established then. And this IPO, is it a fresh issue or an offer for sale?
Actually, it's entirely an offer for sale of about 2.01 crore equity shares by the existing shareholders. There's no fresh issue component, which means the company won't directly receive any funds from this.
Gotcha. So, who exactly is selling their shares?
Well, the promoters are selling a chunk, around 1.27 crore equity shares. And then there's Kedaara Capital, who's exiting completely by selling their entire stake, which is about 74.36 lakh shares.
Wow, a complete exit. That's interesting. So, what are the key dates to keep in mind if someone's interested in investing?
The anchor book opens on February 7th, and the IPO itself will be open for subscription from February 10th to 12th. Allotment should be finalized by February 13th, and listing is expected on February 17th.
Okay, those are important dates. Now, I'm curious about their financials. Are they doing well?
From what I've seen, they've been performing quite well. In fiscal year 2024, their profit grew by almost 66% to 225.1 crore rupees, and revenue increased by over 51% to 1,741.4 crore rupees.
That's impressive growth. What about more recently?
Even the 6 months leading up to September 2024 showed good growth. Profit was up nearly 22% to 101 crore rupees, and revenue grew by over 12% to 770 crore rupees.
That sounds pretty solid. Who are the big names managing this IPO?
Big players: ICICI Securities, Citigroup, Global Markets India, JM Financial, Novama Wealth Management, and SBI Capital Markets are the book running lead managers.
Okay, so I am guessing they have competitors in the market?
Yeah, definitely. They compete with listed entities like Action Construction Equipment, BEMIL, and Escorts Kubota. I mean, big names in the construction equipment space.
Right, that makes sense. So, what's their market share like?
Currently, they hold a pretty significant market share, around 77% in the self-moking concrete mixers segment. They are like a market leader.
That's a pretty dominant position. So, what are some of the strengths that Ajax Engineering has? I mean, besides just the numbers.
Well, for starters, they are a market leader in the SLCM segment, with a huge market share. They also have a comprehensive range of concrete equipment and strong in-house design capabilities. Plus, they have a wide dealer network and a diversified customer base.
Okay, so they have a good hold on the market and a wide reach. Are there any risks involved that potential investors should be aware of?
Well, like any investment, there are risks. A significant portion of their revenue comes from the sale of self-logging concrete mixers, so any dip in that market could affect them. Also, their business is somewhat seasonal, and most of their manufacturing is concentrated in Karnataka, which exposes them to regional risks.
Okay, that's good to know. Concentration in one product in one region could be a risk. Anything else?
Right. And there have been some modifications in their statutory auditors' reports in the past, which could potentially affect the trading price of their shares. Also, the proceeds from the offer won't be available to the company since it's an offer for sale.
All right, that's good to keep in mind. And I guess this is where we casually remind our listeners that we advise investors to check with certified experts before taking any investment decisions, right?
Absolutely. Always best to do your homework and get professional advice before diving in. It's your hard-earned money.
So this IPO is entirely an offer for sale, meaning the money goes to existing shareholders. How does that typically affect the company's future prospects compared to a fresh issue IPO?
Well, with a fresh issue, the company gets the funds to fuel growth, expand operations, or reduce debt. An OFS like this one primarily benefits the selling shareholders. It doesn't directly inject capital into the company, which might affect its growth trajectory if they were planning major expansions.
That makes sense. So if the company isn't getting the money, what's the advantage of doing an OFS?
An OFS allows existing investors to liquidate their holdings and provides an opportunity for new investors to enter the company. It can also improve the company's stock liquidity and potentially lead to better price discovery in the market.
Mhm. Makes sense for Kedaara Capital to cash out then. Now, it's mentioned that Ajax has 4 manufacturing facilities in Karnataka. How does this regional concentration compare to its competitors?
That's a good question. Having all facilities in one state like Karnataka can create both advantages and disadvantages. On the plus side, it can lead to operational efficiencies and better coordination.
And the disadvantages?
Right, but it also exposes them to regional risks like regulatory changes, labor issues, or natural disasters specific to that region, which could disrupt operations. Competitors with geographically diverse facilities might be better insulated from such risks.
So it's a bit of a double-edged sword. Now, about their customer base, is it concentrated or diversified?
They have a diversified customer base with long standing relationships and over 19,000 customers. A diversified base is generally a good sign as it reduces reliance on any single customer or sector, making their revenue stream more stable.
Okay, diversification is always good. They have a point that proceeds from the offer will not be available to the company. If they are cash trapped, then they can't use it for expansion. So, what's the IPO for?
Well, the purpose of the IPO in this case is mainly to provide an exit opportunity for existing investors, particularly Kedaara Capital. It also gives the company increased visibility and a public listing, which can enhance its reputation and credibility.
Right. So it's more about restructuring the ownership and increasing visibility rather than raising capital.
Precisely. It's like imagine you have a successful small restaurant and you're deciding whether to franchise it or just sell your stake to a larger restaurant chain. This IPO is like selling the stake, not franchising.
Makes sense. So if someone's interested in applying, what's the process through Bajaj Broking?
Well, you just log into your Bajaj Broking trading platform, choose IPO from the menu, see the open IPOs and select apply. Then you enter the quantity and your UPI ID and you're done. It's pretty straightforward.
Okay, sounds simple enough. And what about the lot size and price range for the IPO?
The price range is 599 rupees to 629 rupees per share, and the lot size is 23 shares. So the minimum investment would be around 14,467 rupees for one lot. The maximum investment for retail investors is 13 lots, which amounts to 188,071 rupees.
Okay, that's helpful. Thanks for walking me through all of this.
No problem. Glad I could help. Always remember to do your own research and, consider all the factors before investing. Hey, if you are enjoying this conversation and finding it helpful, remember to like, share, and subscribe to our YouTube channel. It helps us create more content like this.
Absolutely, good point. So, looking at Ajax Engineering, what's your overall impression? Is this an IPO worth considering, or are there too many red flags?
Well, it's a bit of a mixed bag. On one hand, they're a market leader with strong financials and a diversified customer base. However, the OFS structure means the company won't get any fresh capital. And there are some regional and product concentration risks to consider.
So, it comes down to individual risk appetite and investment goals, right?
Exactly. It's like deciding whether to invest in a well-established but mature business versus a high-growth startup,
Right. So, what's the final word then? Any last thoughts for our listeners?
It seems like a company with strong market presence and good financials, but potential investors should carefully weigh the risks associated with the OFS structure and regional concentration. Always do your own due diligence and consult with a financial advisor before making any decisions.
Great advice, as always. Thanks for the insights.